At the end of the day, this is not a good move, but at the same time, I think it is worthwhile remembering the economy has enough momentum to kind of live through it. So we will shave off. We are clearly increasing the risks, I think, and the risks are really on the capital investment front far more than consumption.
And that is the big question.
Yes.
We've already seen
Becky's been on that all morning.
Yeah, so I think that is really the key. That is, we are not just jeopardizing the growth today, we are jeopardizing future growth, and that is playing with fire. So I think the expectation the market still has, if I had told you 3 months ago that we will have a full-fledged trade war and the markets would be down 5-6%, I don't think you would have believed that. And I think what that is telling you is the fact that markets are still expecting that we'll reach some sort of a resolution.
When you look at the overall numbers at a macro level, you see unemployment continues to be low. It's at 3.6%. You see consumer confidence did spike up last month. So the overall health of the consumer is strong. But whenever you have market volatility like you have today, I mean, that's where it's just important for our advisors and our bankers to talk to customers and keep them focused on their goals and objectives.
In the president's view, the Mexican government not doing enough to stop people from coming to the border. Well, adding tariffs on into a issue that is really a different issue than the economics that the deal with Mexico and Canada was negotiated rather toughly over the last 2 years, I think is just kind of throwing gas on a fire and hoping that something happens that's positive. But I don't see how it works well. First of all, it does, as we all know, hurts the consumers, hurts the suppliers, which hurts the overall economy, and doesn't really get to the point where Mexico finds a way to stop people who want to come to the U.S. I doubt it.
Between Mexico and the United States, it's about $250 billion of auto parts imports from Mexico to make about $500 billion of final autos product inside the United States. Higher tariffs are going to have an impact on that, so it's going to hurt the bottom line for particular companies. And in general, this issue now of bringing non-trade issues and trade issues together with tariffs is reducing confidence that we're going to be able to settle trade issues quickly and easily. We think that this is a large issue for corporate profits generally, whether this is around the world, whether this is US-Mexico, and that is going to be something that should weigh on markets. We thought that this was a plus or minus 10% issue if there were no unintended consequences, but just the impact on large company profits from paying these tariffs, that is something that can disrupt markets.